What are the chances that inflation is going to have a significant impact on Bitcoin in the near future? We have an article here from Cointelegraph where they're sharing their point of view on this. I'll share my thoughts and opinions on what they have. At the end of the video, I'll have a link to this article down in the description below. I am not a financial advisor. This is not financial advice. Everything I'm sharing is my own opinion. It's my own research. I highly encourage you to go do your own research. And with that being said, let's go ahead and dive on into the news. US will see new inflation spike. 5 things to know in Bitcoin this week. Bitcoin starts 2023 with a whimper as volatility stays absent and Bitcoin price tips favors fresh downside to come. Bitcoin begins the first week of 2023 in an uninspiring place as volatility stays away along with traders. After failing to budge throughout the Christmas and New Year break, Bitcoin price action remains locked in a narrow range. Having sealed yearly losses of nearly 65% in 2022, Bitcoin has arguably seen a classic bear market year, but for the time being, few are actively predicting a recovery. The situation is complex for the average holder who is watching for macro triggers courtesy of the United States Federal Reserve and economic policy impact on dollar strength. Prior to Wall Street returning on January 3rd, Cointelegraph takes a look at the factors at play when it comes to Bitcoin price performance in the coming week and beyond. Bitcoin traders fear new lows amid flatlining price. Bitcoin hodlers may be wishing for volatility, but so far Bitcoin price action has remained distinctly comatose, data from Cointelegraph Markets Pro and TradingView shows. It seems nothing. Low volume Christmas trading, the quarterly and yearly candle close, and even macro data prints before that can shift the status quo. As Cointelegraph reported, Bitcoin volatility even managed to hit new record lows in the run-up to the end of the year as per the Bitcoin Historical Volatility Index, also known as BVOL. Looking ahead, traders are thus conservative as to what lies in store for Bitcoin USD, as signs of a fundamental shift remain wholly absent from market behavior. It takes a tiny pump into resistance to turn everyone bullish again. The same bull trap has been happening during the entire 2022, yet people don't learn. Il Capo of crypto argued on the day, 12,000 is very likely. His comments came alongside a modest shift upward for Bitcoin, which passed $16,700 for the first time in several days. They were echoed by popular trader and analyst Pentoshi, who likewise flagged $12,000 as a key support zone for Bitcoin to revisit in terms of volume on higher timeframes. Fellow analyst Tony Guinea, meanwhile, once again doubled down on an $11,000 to $14,000 floor for Bitcoin USD, expecting all these levels to be reached in 2 to 3 months, Twitter commentary confirmed on January 1st. Michael Burry warns inflation will return. With another week to go until the United States Consumer Price Index, also known as CPI, print for December hits, the first days of January are relatively calm when it comes to macro Bitcoin price catalysts. That does not mean that there is nothing to look out for, however, as Purchasing Managers Index PMI and non-farm payroll data are all expected in the coming week. The trend in the short to mid-term remains one of declining inflation, according to CME Group's FedWatch tool, this in turn allowing risk assets room for maneuvering. The Federal Reserve has yet to signal that it will pivot on its interest rate hikes, despite the pace of those hikes already beginning to fall. As soon as those signals come in, sentiment around risk on should markedly strengthen. Stay safe in Web3. Oh, and then it's just an ad there, sorry. The Fed will release minutes from its Federal Open Market Committee, FOMC, meeting on January 4th, providing clear guidance on policy going forward. For big shorts, investor Michael Burry, however, even that more permissive scenario is not the end of the inflationary story. Inflation peaked, but it is not the last peak of this cycle, he warned in a tweet on January 2nd. We are likely to see CPI lower, possibly negative, in the second half of 2023 and the U.S. in recession by any definition. Fed will cut and government will stimulate, and we will have another inflation spike. It's not hard. The results of Fed policy have been clear to see for 2022 stock market performance, with the S&P 500, for example, finishing the year 1,000 points below many of the most popular estimates. While markets await the first Wall Street trading day of 2023, The US dollar index is already struggling in what could be the year's first silver lining for crypto assets. The US dollar index, or DXY, is currently threatening to fall through support unchallenged for over 6 months, after which the 100-point level re-enters. Markets, DXY on the verge of breaking down again, 10-year yields reaching resistance, WTI crude rebounded to resistance, gold paused at resistance, stock treading water. Callum Thomas, founder and head of research at Macro Research House top-down charts, summarized in part of Twitter comments on the day. Difficulty due to drop amid grim hash rate data. In the knee-jerk world of Bitcoin fundamentals, it is business as usual as the year begins. Bitcoin's upcoming difficulty adjustment due January 3rd will wipe out gains made 2 weeks prior in a sign that miners remain under pressure over Bitcoin price performance. After rising 3.27% on December 19th, difficulty will drop by an estimated 3.5% this week, according to data from Bitcoin.com, thus failing to seal new all-time highs. Difficulty data in and of itself provides an interesting insight to Bitcoin's health under the hood, despite concerns over miners' financial stability. Competition for block subsidies remains conspicuously high. That said, data from late December captured a grim snapshot for the average network participant, with hash rate an estimate of aggregate processing power dedicated to mining hitting its lowest levels for the year. This is by far the most brutal Bitcoin miner capitulation since 2016 and possibly ever, Charles Edwards, founder of Caprioli Investments, commented at the time. Hashribbon's capitulation has captured the lowest Bitcoin hash rate reading of 2022 as miners bankrupt and default under the great pressure of squeezed margins globally. An accompanying chart showed Bitcoin's hash ribbons indicator entering another capitulation zone in which miners shut off hash rate en masse. A similar event occurred in July 2022 and another a year prior to that. As Cointelegraph reported, Bitcoin's public mining companies also continue to feel the strain, with Core Scientific getting a provisional bankruptcy loan of nearly $40 million from creditors including BlackRock. Bitcoin supply goes to sleep. As volatility stays absent from Bitcoin for weeks on end, there is understandably little impetus to sell among hodlers. The latest on-chain data supports that theory, with the Bitcoin supply becoming increasingly dormant as speculators stay away. According to on-chain analytics firm Glassnode, the amount of the supply stationary in its wallet for the past 5 to 7 years has hit its highest since January 2018. That trend has been in place for much of the past year, as those who bought Bitcoin in the last halving cycle see their purchase prices returning. As the supply ages, the volume of coins moving on a short-term basis is likely decreasing, hinting at an absence of knee-jerk speculative trading. The amount of the Bitcoin supply last active between 3 and 6 months ago is now at 5-year lows, Glassnode confirms. Supply active between 3 and 5 years ago is now at 1-year lows. Supply is getting rare again. Analytics resource Stock Money Lizards responded to similar dormancy data at the end of the last month. An accompanying chart showed the relationship between dormant supply and macro highs and lows for Bitcoin price action. Sentiment in no man's land. In a similar sign, the many market participants simply do not know how to feel about the future of crypto. Sentiment is neither here nor there. That is one reading of Popular Sentiment Gauge, the Crypto Fear and Greed Index, which continues to surf territory just above extreme fear. A story already characterizing much of the period after the FTX meltdown. Sentiment appears to be confused over how bad the state of crypto really is. Out of the index's 5 sentiment brackets, only fear has endured in recent weeks, with the last trip deeper into extreme fear coming in late November. As Cointelegraph has explained in a dedicated guide, fear and greed can offer key insights into market activity based on investor behavior. In 2022, it hit lows of 6 out of 100, a score rarely ever seen in Bitcoin's lifetime. Despite a brutal 2022 for crypto in terms of sentiment, I've never been more excited about the industry long-term from a fundamental perspective. Daniel Chung, co-founder of investment firm Synesy Capital, nonetheless concluded in a Twitter thread on January 1st. All right, so there's quite a bit of information that was included in here. They definitely went in depth on this. As far as for my thoughts, it's going to sound a little bit more basic, but hopefully relatable for many people. So the thing is that when we look at the history trends of inflation in the last months, it doesn't look like it's had that much of an impact overall on the price of Bitcoin. What we have seen, however, is huge events. These are catalysts such as FTX's collapse, Terra Luna's collapse, the threat lingering of other stable coins potentially collapsing or starting to depeg. Those are things that we've noticeably seen as impacts on the market. Now, for sure, as the price of Bitcoin kind of lingers on, there is this strong question with these miners of, are they going to have to start selling a lot to start recouping their positions? Because they can only not sell for so long until they have to cover their expenses, right? That is a very serious concern. And guess what? If a lot of these miners start selling, it could start driving the price down a ton. I think we're also seeing, though, at a point where there's a lot of individuals that now own their own share of the overall big pie. So not necessarily the miners are the most dominant, but they do have a significant presence for sure. So there is some, I feel, reassurances there that as miners do mine these things, when they sell it, oftentimes that's going into the hands of people that aren't miners, that don't have to worry about that overhead, those expenses. They can hold on to this no problem. The miners, let's see what goes ahead happening with them moving forward next. Inflation coming up again. Very probably the BPM is going to end up going up more. That point system, probably another, if I had to take a guess, it's going to go up another 5 points. So let's see what ends up happening, though. Tell us your guys' thoughts down in the comments below. Overall, I'm looking pretty good at 2023 from the outside. I think that things are going to be starting to recover. But it's really early. It's a little too early to call. It's just, how do I feel at the moment? Not a lot of evidence since it's only January 2nd, right? That's what they were kind of reiterating here too, is that a lot of the other analysts towards the end, it's just kind of a neutral zone. There's not real full clarity on things. Hopefully things will be good. Really hope so. Thank you guys so much. Appreciate my Patreon supporters. Double shout out thank you to WeLoveSafeMoon.com, Victor Vegas, SafeMoon Oz for being higher level patrons. Also thank you to my YouTube members for your support. If you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up, like button. God bless, and we will see you in the next episode.